China isn't panicking, it's preparing, quietly, deliberately, on a scale the world has never seen before. Behind closed doors, one nation is stacking gold reserves at a record pace, securing copper, locking in lithium, buying farmland most people don't even know exists. This isn't about profit. It's about survival for what comes next. And by the time most investors realize what's happening, the window to prepare may already be closed. Welcome back to Precious Metals Intelligence, the channel built for those who study history to understand what's coming next. If you're new here, this is a place for serious analysis, not noise. Before we go further, we'd genuinely love to know, where are you watching from today? Drop your city or country in the comments. It always amazes us how far this community reaches. And if you find value in analysis like this, consider joining the channel by subscribing. It helps us continue producing careful, research-driven content for viewers who prefer substance over speculation. Every so often, a nation does something that looks small on the surface but means something much bigger underneath. Right now, China is doing exactly that. It is buying gold, not a little, a lot. Month after month, the central bank keeps adding to its reserves, even when prices climb higher. Most people see this and think it is just another financial headline. But those who study history know better. They know that when a major nation buys gold at this pace, it is rarely about the price. It is about what comes next. To understand why this matters, it helps to look back. Nations do not usually explain their true intentions in public statements. They show their intentions through actions. And one of the clearest actions a country can take is deciding what to hold when trust in paper promises starts to weaken. Gold has no debt attached to it. It does not depend on another country's promise to pay. It does not lose value because a government prints more currency. This is why, throughout history, gold has always returned to importance during times of uncertainty. Consider the years before major global conflicts in the last century. In those periods, several nations quietly moved to secure gold and hard assets before the public understood why. By the time ordinary people saw the full picture, the shift had already happened. The nations that prepared early were in a stronger position. The ones that waited had far fewer choices. This pattern has repeated more than once. It happened around major currency changes in the 1970s. It happened again after the financial crisis of 2008, when many central banks quietly increased their gold holdings instead of relying only on foreign currency reserves. Now, a similar pattern is forming again, but on a larger scale. China is not simply adding to its gold reserves for tradition or symbolism. Analysts and economists have pointed to specific reasons. Trust in relying on a single dominant currency for trade and reserves has been slowly declining. Sanctions used as economic tools in recent years have made many nations think twice about how much they depend on financial systems they do not control. When a country cannot be certain that its assets will remain untouched during a political dispute, it looks for alternatives. Gold is one of the oldest alternatives there is. But here is what makes this moment different from before. It is not only about gold. China is also securing other resources at the same time. This is not random. It follows a pattern of preparing for a future where control over physical resources matters more than control over currency alone. When a country moves on multiple fronts at once, it usually means the strategy is deep, not temporary. This is why serious economic observers are paying close attention. It is not because gold prices are moving. It is because of who is buying, how much they are buying, and how consistently they continue to buy, even when conditions change. Ordinary buying slows down when prices rise. Strategic buying does not. It continues because the goal is not short-term profit. The goal is long-term protection. For the average person watching from the outside, this raises an important question. If one of the largest economies in the world is preparing this seriously, what does that suggest about the years ahead? Is this simple caution? Or is it something closer to preparation for a major shift in how global trust and value are measured? History does not give perfect answers. It gives patterns. And patterns tend to repeat when the same pressures return. Right now, many of those pressures are returning. Currency tension, economic rivalry, uncertainty about future access to trade and resources. These are the same forces that pushed nations toward gold in past decades. The difference this time is the scale and the speed at which reserves are being built. This leads to a deeper question that goes beyond gold alone. If a major nation is preparing this quietly and this consistently, what other resources are being secured in the background, and why? That question opens the door to a much bigger picture, one that goes far beyond a single yellow metal, and into the full strategy behind economic survival in an uncertain world. Picture a person quietly buying extra flour, batteries, and fuel long before anyone else senses trouble. Neighbors might call it strange, but if that person later turns out to be right, everyone else wishes they had paid attention sooner. On a much larger scale, this is what China appears to be doing right now, except Instead of flour and batteries, the items are copper, lithium, rare earth elements, farmland, and energy supplies. Gold gets most of the attention because it is easy to understand. It is old, familiar, and tied to centuries of trust. But gold is only one piece of a much larger plan. To see the full picture, it helps to look at what else is being collected and why those specific items matter so much. Start with copper. It may not sound exciting, but copper runs through almost everything modern life depends on. Electricity grids, vehicles, construction, and technology all need it in large amounts. Without steady access to copper, entire industries slow down. A nation that secures copper early is not just thinking about today. It is thinking about the machines, cities, and technology of the next 20 years. Then there is lithium. Most people now recognize this word because of batteries, especially for electric vehicles and energy storage. But lithium is not just about cars. It is about who controls the future of energy itself. Whoever holds strong access to lithium holds real influence over how fast the rest of the world can move away from older energy systems. That kind of influence is not something any major nation wants to be without. Rare earth elements matter just as much, even though most people have never heard their names. These materials are used in smartphones, defense systems, wind turbines, and advanced manufacturing. A small number of countries control most of the world's supply. When one nation quietly increases its hold on these materials, it is not simply stocking up. It is making sure that other nations may one day need to come asking for access. Farmland tells a similar story, but from a different angle. Food security is one of the oldest forms of power in human history. A nation that secures fertile land and food production capacity is protecting itself against a future where food, not just money, becomes a source of leverage between countries. This is not a new idea. It is one of the oldest survival strategies known to civilization, simply applied on a modern global scale. When these pieces are placed side by side, gold, copper, lithium, rare earths, and farmland, a pattern begins to form. This is not the behavior of a country focused on short-term profit. It is the behavior of a country building a long-term shield. Each resource protects against a different kind of risk. Gold protects against currency and trust issues. Copper and lithium protect against falling behind in energy and technology. Rare earths protect against future dependence on rivals. Farmland protects against food shortages and instability. This is what makes the current moment so different from ordinary market activity. Prices rising and falling is normal. Businesses adjusting supply chains is normal, but one nation moving across so many critical resources at the same time, with this level of consistency, is not ordinary at all. It suggests a level of planning that looks years, maybe decades, into the future. There is another layer to this that deserves attention. Controlling key resources is not only about protecting oneself, it is also about influence. A country that holds large amounts of critical materials gains quiet leverage over others who depend on those same materials. This kind of leverage rarely needs to be announced. It simply becomes real the moment a shortage or crisis happens, and the world realizes who is holding the supply everyone else needs. This raises an uncomfortable question for anyone paying close attention. If controlling resources creates this kind of power, what happens to nations, businesses, and even individuals who assume these resources would always be easily available? The next part of this story moves from resources to something even more fundamental. The trust placed in currency itself, and why that trust may be quietly shifting on a global scale. Money only works because people believe in it. That belief is the quiet foundation underneath every economy in the world. A dollar, a yuan, a euro, none of these have value because of the paper or the numbers on a screen. They have value because millions of people, businesses, and governments agree to trust them. When that trust stays strong, everything runs smoothly. When that trust starts to weaken even slightly, the effects can spread further than most people expect. For decades, one currency has sat at the center of global trade and reserves more than any other. Most international transactions, loans, and reserves have depended heavily on it. This arrangement has lasted so long that many people simply assume it will always continue this way. But history shows that no currency arrangement lasts forever. Arrangements built on trust can shift when that trust is tested too many times. In recent years, that trust has been tested. Sanctions have been used more frequently as tools in political and economic disputes. When a country's access to its own reserves can be restricted or frozen because of political tension, other nations take notice. It does not matter whether they agree or disagree with the reason behind the sanctions. What matters is the lesson they take from watching it happen. If it can happen to one country, it can potentially happen to any country that depends too heavily on a financial system it does not control. This is where gold re-enters the story, but from a different angle than before. Gold cannot be frozen by another government. It does not depend on a foreign banking system to hold its value. It cannot simply be deleted from an account during a political conflict. This is exactly why central banks, including China's, have been steadily increasing gold reserves while slightly reducing reliance on foreign currency holdings. It is not a dramatic announcement. It is a slow, quiet adjustment, the kind that only becomes obvious when viewed over several years instead of several months. At the same time, more countries have started exploring trade agreements that avoid relying on a single dominant currency altogether. Some of these efforts move slowly, some face real obstacles. But the direction of the conversation itself is meaningful. Nations do not spend time discussing alternatives to a system unless they feel the current system carries real risk. It is important to be careful here and avoid exaggeration. This shift does not mean any currency is on the verge of collapse. Global finance is complex, and major currencies remain deeply embedded in trade, debt, and daily transactions worldwide. Change on the scale, if it happens at all, tends to unfold over many years, not overnight. But the direction of movement still matters. Small shifts in trust, repeated consistently over time, can eventually lead to large shifts in behavior. This is the deeper reason why gold buying matters so much right now. It is not simply a financial decision. It is a signal about how much confidence a major economy places in the current global financial system. When that confidence quietly declines, even a little, gold becomes one of the clearest ways to see it, because gold does not care about politics, borders, or promises. It simply holds value on its own. For business professionals and everyday investors watching from the outside, this raises a serious question. If a major world economy is positioning itself for a future where trust in a single currency system may weaken, what does that mean for personal savings, business planning, and long-term financial decisions? It does not necessarily mean panic, but it does mean paying closer attention than usual. History has shown, again and again, that major shifts in trust do not arrive with a clear warning sign. They arrive slowly, quietly, and are only fully understood after they have already happened. The nations, businesses, and individuals who paid attention early were the ones who had time to adjust. Those who waited for certainty often waited too long. This brings the story to its most important lesson yet, not about nations or currencies, but about ordinary people and businesses trying to protect what they have built. The next part explores what history teaches about being prepared and why waiting for perfect clarity has rarely worked out well for those who choose to wait. History rarely rewards those who wait for certainty. It rewards those who notice the pattern early and act while the picture is still forming. This has been true again and again, in different decades, in different countries, under different circumstances. The details change, but the lesson stays the same. Those who prepared before a crisis arrived usually protected what they had. Those who waited for confirmation often found that by the time they were certain, it was already too late to act with the same advantage. Look back at earlier periods of economic disruption. In each case, there were early signals long before the wider public understood what was happening. Prices moved slowly at first. Warnings from analysts were often dismissed as overly cautious or exaggerated. Most people continued with daily life exactly as before, assuming stability would simply continue. It almost always does, right up until it does not. And when the shift finally became visible to everyone, those who had prepared earlier were already in a stronger position, while others were left trying to catch up under far more difficult conditions. This pattern is not only about nations and central banks, it applies just as strongly to individuals and businesses. A business owner who diversifies supply sources before a shortage hits is in a very different position than one who waits until shelves are empty. An investor who holds a mix of assets, including tangible ones like gold, is in a very different position than someone who assumes that paper assets alone will always hold their value. The lesson is not about predicting the future perfectly. It is about not being caught completely unprepared when change arrives. This is where the idea of economic resilience becomes important. Resilience does not mean fear. It does not mean assuming the worst will happen tomorrow. It means building a position that can withstand uncertainty, whatever form it eventually takes. This usually comes down to a few simple principles that have held true across generations. Diversify, so no single failure can cause total damage. Hold some assets that do not depend entirely on trust in a system or a government. Pay attention to patterns, not just headlines, because patterns tend to reveal what headlines often miss. It is worth remembering that gold, throughout history, has never promised excitement. It has never promised fast returns. What it has offered again and again is stability when other systems came under pressure. This is precisely why nations like China are not buying it for short-term gain. They are buying it because it is proven across centuries to hold value when trust in other systems weakens. That same logic can apply to individuals and businesses making decisions today, not out of panic, but out of preparation. None of this requires predicting exactly what will happen next. No one, not analysts, not economists, not even central banks, can predict the future with full certainty. What history does offer is something more useful than prediction. It offers pattern recognition. And right now, several of those familiar patterns are appearing again at the same time. Central banks accumulating gold, nations securing critical resources, currency trust being quietly re-examined. These are not isolated events. They are pieces of a larger picture that has appeared before in history, just with different names and different decades attached to it. The real question is not whether change is coming. Change is always coming in one form or another. The real question is whether individuals, businesses, and everyday viewers are paying attention early enough to make thoughtful decisions, rather than reactive ones made under pressure later. Those who study history carefully understand this simple truth. Preparation before a crisis is a choice. Preparation during a crisis is often no longer a choice at all. This brings the story to its final and most important part, the one that moves beyond history and strategy and into a clear, practical conclusion for anyone watching who wants to think seriously about what comes next.